Hello everybody, welcome to History of Money. Professor Barth here, history professor at Arizona State University. Alright, we've got a big lecture today. I'm looking forward to it. It's going to be good. Lecture 33, Part A. We're going to take a look at the Roaring Twenties, a period of just spectacular economic growth, prosperity, and cultural achievement. We'll touch on all of it. Part B, we'll take a look at Herbert Hoover in the first years of that Great Depression. And in Part C, we'll take a look at the epic presidential election of 1932 between FDR and Herbert Hoover. All right, so after World War I, hundreds of thousands of soldiers, American soldiers, young men, return home to a fairly dire economic situation. Auto production, housing, consumer goods are all in very short supply immediately after the war. The cost of living has doubled across the board. There have been significant increase in prices, and the market was just unable to immediately absorb all of these new these veterans back into the workforce. And it was a time of declining business activity immediately following the war. And then there were other just really big social problems. You had a Red Scare regarding the role of communist groups in the United States. You had race riots, such as in Chicago in 1919 and elsewhere. You had the Spanish flu epidemic, which killed 675,000 Americans. In today's numbers, that would be, over 2 million Americans dead from a pandemic. So very, very severe and targeted mostly young adults. And just pretty bleak times. Here's the money supply. You'll see the growth during World War I. Beginning in 1914, 1915, quite a significant increase in M2. M2 is the money supply, includes cash, coin, checking accounts, other non-interest-bearing deposit accounts. And this is a graph that we'll follow today and as well as in Lecture 34. But you see quite a growth in the money supply there. Well, in early 1920, this then translates into a deflationary economy. In early 1920 into spring of 1920, a very sharp contraction. The stock market falls significantly. Actually, it falls by 47%, the Dow Jones, from its previous peak. Well, because with the inflation immediately after the war, you see the Dow Jones went up quite a bit. But now, severe decline in the stock market, extreme deflation in 1 year, an 18% fall in prices. That ended up having quite a severe impact. Auto production was down 60% in this roughly 18-month period. Industrial production in general was down 30%. Unemployment reached about 10%. Lots of bankruptcies, and even businesses that survived bankruptcies lost as much as 3/4 of their profits. The Federal Reserve responds to this crisis by hiking interest rates. In fact, actually the hike in interest rates was in large measure a response to the inflation that had taken place during World War I, and immediately following the end of the war, the New York Fed quite significantly raises the discount rate, and quite quickly. This is what's responsible for the deflation. So it's severe. The system is gutted. Prices fall, interest rates rise. It's difficult to borrow money for a period. And yet, recovery followed shortly after. And you see this graph here, this is the Dow Jones. Look at that. Went up quite a bit by mid to late 1922, we're close to where we were at the peak, and that was an inflationary economy there in 1919. So the systems recovered by 1922. It's fairly rapid recovery. For this reason, not many people remember the Depression of 1920 and 1921. Federal Reserve, by the way, ended up slashing interest rates, bringing them back down to those previous low levels. But for a period, you had these high interest rates that put a stop to the inflation. The President of the United States was a Republican, Warren G. Harding. And Warren G. Harding was pro-business, laissez-faire in bent. He was a supporter of reducing the income tax, and in fact, the income tax was substantially reduced under Harding's administration. For the top bracket, it was the top bracket. The income tax was the rate was lowered from 77 to 24%. That's a huge rate cut. And then for lower incomes, the income tax was basically done away with. For most Americans, they paid only a very, very tiny level of income tax, much, much smaller than what we pay today. Reduced federal spending, and then protective tariffs. Republicans in the 1920s were supporters of protective tariff to protect agricultural goods within the United States, but also industrial goods. The Secretary of the Treasury during Harding's administration, Coolidge's administration, and then Hoover's administration was a man named Andrew Mellon. Andrew Mellon was a banker and investor in a number of different industries. And Mellon was a big free market, laissez-faire, pro-business advocate. Big advocate of low taxes. Mellon argued that lower taxes will lead to rapid economic growth, lead to fresh capital investment. This is a program that Mellon endorses. Mellon also supports a protective tariff as opposed to an income tax. With a protective tariff, you're taxing foreign production. With an income tax, you're taxing domestic production. And so Mellon supports a protective tariff as an alternative source of revenue to the income tax. Mellon also supported the Fed's decision to cut rates in 1921 through 1922 to provide credit to capital markets. And what proceeds after the Depression of 1920 and 1921 is a period that historians label the Roaring Twenties. The Roaring Twenties. The economy grew over the course of the Roaring Twenties by 42%, and gross national product rose on average about 5% a year. The United States during the 1920s produced almost half of the world's industrial output and became the wealthiest country in the world. Some economic historians estimate that America during this period may have possessed up to 40% of the world's total wealth. There were construction booms, skyscrapers constructed in cities, wages rose, unemployment fell below 4% and remained at below 4% through most of the decade. Average income rose from almost $6,500 per person per year to over $8,000 per person, so that the U.S. became the richest country in the world per capita as well. The automobile industry was famously thriving in the 1920s. Henry Ford quadrupled his productivity at Ford auto plants, and in the 1920s was able to sell the Model T for less than $300. Think about that, less than $300, so that by 1929 there were 26 million automobiles in the United States out of a population of about 100 million people. Okay, so pretty remarkable job there. And of course, Henry Ford mastered the assembly line, and his theory was, hey, let's make the Model T affordable enough so that my own workers can buy a Model T. Consumer goods just across the board, electricity, refrigeration. Here's some advertisements for General Electric refrigerator, electric refrigeration, Frigidaire, all sorts of consumer goods in this period. And of course, culturally, which I already alluded to, you have the film industry, silent movie theaters. Zorro. Radio takes off in the 1920s and becomes a cultural phenomenon. Radio programs and music, news. Gather your family around and listen to a program. Professional sports, which you could listen to on the radio. There's Babe Ruth. Professional sports take off in the 1920s and become a major attraction. Aviation. This is the decade in which Charles Lindbergh Jr. flew the first transatlantic solo flight. Dance clubs, dance halls, new forms of dress, the Jazz Age, right? An optimistic time, in short, in American history. Speakeasy bars, despite prohibition of alcohol. Telephone lines. And New York City. New York City. There's a photograph of New York in the 1920s. Look at all those skyscrapers. Quite an impressive sight. And so much activity is happening there. Of course, this is the site of the New York Stock Exchange. This is one of my favorite photos from the period. Construction worker. What an exciting time to be an American. The New York Fed, of course, the most powerful of the Federal Reserve banks, headquartered in New York, and there's the New York Federal Reserve building. Remains the main building for the New York Fed today. And actually, in the mid-1920s, the Federal Reserve went on a public relations campaign to pitch the Federal Reserve as a very positive institution that was promoting growth in the American economy. And all of the following posters you'll see were created in the mid-1920s, and banks would feature these posters to bolster confidence in their banking system, in that particular bank. This one, for example, says, "The Federal Reserve System is the keystone of America's financial structure. This bank, as a member, contributes to national stability. The foundation of the Federal Reserve System is the cooperation and the community of interest of the nation's bank. This bank, as a member, shares in the strength and the protection which federal supervision affords. The Federal Reserve System is a reservoir of funds which are instantly available when danger threatens American business. This bank, as a member, offers interested service and unquestioned strength." This is all before 1929. "The pillars which support the nation's business are banks which belong to the Federal Reserve System." And then this last one, "These 12 Federal Reserve banks, their branches and their 9,700 member banks, form the strongest banking unit in the world. This bank, as a member, brings its depositors this complete protection." So there you have it. Very impressive. Calvin Coolidge became president in 1923. Warren G. Harding had a fatal heart attack, and Coolidge took over and then ran for re-election in 1924. Laissez-faire guy, even more so than Warren G. Harding, known as Silent Cal. Didn't really say much. Didn't have much interest in intervening. Not a man who sought to flex executive muscle in the White House. And Andrew Mellon exerts a lot of influence in the Coolidge White House. In fact, under Calvin Coolidge, the national debt was cut in half. Well, under Harding and Coolidge, the national debt was cut in half. It was $33 billion in 1919. By 1929, the national debt was only $16 billion. Then in 1927, with the endorsement of Andrew Mellon, Coolidge and the Republican Congress lowered income taxes even further, so that only the wealthiest 2% of Americans paid any income tax at all, and even that rate was lowered from the previous levels. 98% of Americans paid zero income tax, zero federal income tax, that is. And so, again, continuing that prosperity through the 1920s. There's Andrew Mellon on the cover of Time magazine in 1923, a popular Treasury Secretary before 1929. Look at that. There's the Dow Jones Index. Went down, of course, in 1920 and 21, but now it's doing quite well. By 1928, by the start of 1928, it is already more than double what it was at the start of 1922. So if you had invested money in the stock market and held on to it and then sold in 1928, you doubled your money. Not bad. Well, what is the New York Fed doing during this period? Because you'll remember, before the establishment of the FOMC in 1933, and especially as composed in 1935, each Federal Reserve Bank basically conducted its own independent monetary policy. And, of course, the New York Fed is right there in New York, and it had strong ties to the New York Stock Exchange. Well, throughout the 1920s, low interest rates, and you see it there, on occasion, an increase and then a fall. An increase and then a fall. By the way, I forgot to mention, the one sector that struggled in the 1920s in the U.S. was farming, agriculture. Agriculture didn't do so well in the 1920s, and so that was one of the big exceptions to this general prosperity. It's fairly low interest rates throughout the period. We'll get to this rise soon. Well, where does that new currency and credit go? It goes into the banking system. Much of that new money and credit was funneled into the New York Stock Exchange. And the fact is actually that these banks, member banks, commercial banks, were actually loaning more money for investments in real estate and the stock market than they were for actual commercial enterprises. And so much of this new credit and currency is going to straight into the stock market. And particularly with the fact that you had buying on margin in the 1920s. Buying on margin. This phenomenon of buying securities or buying stocks with borrowed money. Okay? Borrowing money, buying stocks on credit, and betting that a rise in the price of that stock and then a quick sale will allow you to make a very quick and easy profit. And so especially in 1927 and 1928, what we know today with hindsight, a stock market bubble arises. And look at the M2 graph here, money supply, 1921. That's quite an increase in the money supply. All right, not as steep as World War I, but pretty darn close. So the money supply is expanding. M2 is expanding throughout the 1920s. And much of that money is going into the stock market and other speculative investments. Yeah, look at that. 1928 is when the stock market really took off. You could argue that this period here, this was natural stock market growth, right? Because there were natural reasons for why the U.S. economy was expanding. It wasn't just all speculative. But especially in 1928, a speculative mania takes over the New York Stock Exchange, and you see this huge spike as more and more ordinary investors begin to get into the game. And again, many of them are buying stocks on credit, on margin. But by late 1928, this is a thriving economy. Many people do not see any end in sight, really. We've got a Federal Reserve, right? The Federal Reserve is there to prevent us from having another panic of 1907 or another panic of 1893. Remember those PR posters for the Federal Reserve? A reservoir of funds in times of emergency. So all is well and good, most Americans believe. Now, there are some people in 1928 who are raising red flags, right? Or identifying red flags in the economy. But most Americans, they don't see a depression coming around the corner at all. Herbert Hoover, who was Secretary of Commerce under Harding and Coolidge, runs as a Republican in 1928 and wins a landslide election against Democrat Al Smith, who was a Roman Catholic and who was running primarily on repealing prohibition. Most Americans are very, very pleased with how the Republicans are doing in the 1920s, and Republicans have no problem at all winning re-election. Al Smith just carries the Deep South because the Deep South is going to vote Democrat no matter what. I didn't mention this, but Warren G. Harding actually reversed President Woodrow Wilson's policy of excluding African Americans from the White House and from federal employment. Harding reverses that, and also was first president to really speak out against lynching in the South. In the 1920s, African Americans primarily voted Republican. It was the party of Lincoln. Democrats were the party of Woodrow Wilson, the South, the KKK, etc. And so, era of Republican dominance in the 1920s. Hoover, at the RNC convention in 1928, says the following, notoriously: "We shall soon, with the help of God, be in sight of the day when poverty will be banished from this nation." President Hoover, August 1928. I'm going to go more into Hoover's background in part B of this video. We'll take a look at who was Hoover, where did he get his ideas from, and this Hoover's story is quite an interesting one, as is FDR's, which we'll explore in part C. Yeah, look at that. Wow. That is quite spectacular. Again, we see in hindsight the bubble. But it's very, very difficult to identify a bubble in the present moment. Because people don't want to be bearish. They want to be bullish. They like that optimism. And Hoover brought the optimism. Hoover had a self-confidence about him that was infectious in 1928. But there are warning signs. And the Fed sees those. The Fed early in the first half of 1928 begins hiking up interest rates, right? They see things overheating. Okay, it's clear that things are overheating a bit. I mean, look at that stock market. And so the Fed begins to apply brakes to things, and then stops toward the end of 1928 and early 1929, kind of stalls a bit, and then in mid-29 begins raising rates again. Right? Some critics of the Fed identify this as one of the reasons why the economy crashed. My personal opinion is no, it was something that the Fed needed to do because the economy was overheating and interest rates were too low. I'm giving my personal view there. By the way, on the subject of the Great Depression, if you didn't know this, most of you do, there are many, many different opinions among economic historians about why it happened and why it was so prolonged. We'll go into some of those alternative theories about the Great Depression in another video. But in any event, next for part B of the next lecture, we'll take a look at Herbert Hoover in the first years of the Great Depression. See you for part B.